Good evening, broader OMNI community. It's a privilege to be online with all of you this evening. There might be some additional people that will join us throughout the evening. Otherwise, it's my privilege to say welcome to everyone. For those of you who have not met me, my name is Lisa, and I'm just going to share with you a little bit, or position with you a little bit of why we're actually having this session this evening. Because for us as a business, collaborating and being partners with you is incredibly important. You are a very important part of our brand, and you represent us in day-to-day activities and projects that we engage with. So part of what we would like to do is give back and support and help. Therefore, let me just expand a little bit about why we are doing, sorry, my phone is still on volume. Let me just switch this off. Why are we having sessions like this from a discussion from a governance point of view? So OMNI is in the business of creating standards others are drawn to, and one of the key components is also to be a good corporate citizen. So linked to that is obviously, as being a corporate citizen, is the governance that is required from tax and tax compliance. Therefore, when we engage with you and when you become a supplier to us, there are certain compliance requirements that as a business and as a good corporate citizen we have. So again, we don't see you as suppliers. We actually see you as an extension of who we are as an organization, hence actually being a collaborative partner, and we want to work with you. So today we want to create an opportunity to explain a little bit around the compliance and around all the key requirements. We've done quite a bit from a development perspective of having suppliers on our books, and what does it look like when we procure people to work with us, either in a staff on demand model or procuring businesses to work with us. So we have a process through which we now work our procurement, and the platform through which we work is Zoho. You would have most probably seen some of the links asking you to provide us with information and compliance information. And it is therefore becomes part of our procurement and part of our process of actually making sure that we are a good corporate citizen with that concerned. By default, we want to create an environment where you can be informed and look at some of the compliance requirements for you as an individual, or if you have a business and a business entity, what that also means. So therefore, it is my privilege to welcome Marietta and Darren this evening, as we are definitely not the experts, they are. So Marietta, I'm very grateful for the time you and Darren are putting aside. Hello, it is so nice to have both of you here and to welcome you to this space. Everyone that's on, we'll monitor the chats and the engagements. And I want to say thank you very much for your time. There's another person coming in. Sorry, let me just admit. And thank you for the opportunity just to share in your expertise. So Marietta is a tax expert. So thank you very much for your time. In my last engagements with her, I even learned a lot. So thank you very, very much. And then Darren, it's the first time we're meeting. But I do hear we're an aspiring chartered accountant. Am I correct?
That's correct. Yes.
Awesome. So I'm going to hand over to the experts. Please, if you've got any questions, hands up or chat in the chat box, and we will monitor that. Thank you very much. Over to you.
Perfect. Thank you, Lisa. Thank you for the introduction. Good evening, everyone. I really hope you guys learned tonight. I tend to talk very fast, so please just say in the comments or in the chats if I go too fast. We will be addressing all queries. If not tonight, we will answer those for you guys in a separate email or in a separate document afterwards. So the first topic we're going to talk about tonight is independent contractors. So independent contractors is one of the most testy subjects, I almost want to say, in the Tax Act. And there's lots of opinions regarding this. The biggest reason for this being that if you're not an independent contractor, you're deemed to be an employee, and whoever pays you then has to deduct employees tax or pay as you earn from whatever they pay you. And most of you, your circumstances, this would be OMNI would then have to regard you as an employee and deduct pay as you earn if you're not an independent contractor. And to make life easier for OMNI, I think they might even request that people sign an agreement to say that you're an independent contractor for tax purposes. Because if you're not an independent contractor and SARS does a pay-as-you-earn audit at OMNI, they will hold OMNI pay liable for any employee's tax, which OMNI then has to, again, get from you. So this is a very important distinction between an employee and an independent contractor. And this mostly has to be done by the person that pays you. Now, before I go any further, there's a very important distinction, because the next topic we're going to talk about is personal service providers. So an independent contractor will be an individual. A personal service provider will be a trust, a company, or closed corporation, or an Inc. So if we talk about independent contractors, we're now talking purely about individuals. Okay, so how do I know if I am an independent contractor? This gets very, very tricky, because with SARS, there's two tests that you can do. The first is the statutory test, and the second is a common law test. Now, the statutory test is the most comprehensive, or the best way to test this for tax purposes. And this is yeah, so I'm sorry, I'm laughing because typical SARS, the statutory test got two tests. And then SARS goes and they say that the second test is more important than the first test, but you have to do the first test before you can do the second test. So yeah, this is a typical tax thing. So the first test, when you get to your statutory tests, is if you are deemed to be carrying on a trade independently, and if what you receive is then remuneration. So this is to determine if what you get is remuneration or a salary. The word remuneration is defined in the Act, and I'm not going to go into any definitions tonight because of time constraints, but it's a very broad definition. So, but for tonight's purposes, if we talk about remuneration, we are actually referring to a salary, or what SARS deems to be a salary. Okay, so if we look at the first test, this test has two tests. So the first test of the first test is, where do you perform your services? Is most of your time spent at the premises of the client? Now, the client in this term is who pays you or to whom you rendered a service. So let's say, for example, OMNI contracts you to give training to J and Chartered Accountants, and you spend all your time at our premises to give this training. Because you work for OMNI, and OMNI ultimately pays you to give the training to JN, the fact that you're spending all your time at JN's premises, who's OMNI's client, means that you are actually then spending your time at OMNI. That's how SARS interprets this. So your time, if you spend more than 50% of it at the premises of the client, be that who pays you or to whom the service is rendered, you are considered to be an employee. However, then we look at the second test of the first test, which is under whose control and supervision are you? So if OMNI has control and supervision over how you spend your time, what you do with your time, and basically determines when you need to work, how you need to work, and when you can take leave, then this time, then you are deemed to be an employee again. So if most of your time is spent at the clients and you're under their control and supervision, you are an employee. However, and this is where the second test comes in, So the second test says that if you have 3 or more full-time employees who are not connected to you, you're an independent service provider. So even if you spend all your time at our premises or OMNI's premises, and you're under OMNI's control and supervision, as long as you have 3 or more non-connected employees, you're still an independent service provider or an independent contractor. It's very confusing, I think is the word, because why would we want to make the distinction, besides for the pay as you earn, between what is an independent contractor or not? The biggest reason for that being that if you're an independent contractor, you are seen to be self-employed, and as such, you can claim certain expenses against the income that you received. Whereas if you're an employee, you get pay as you earn deducted from your salary, and then your deductions that you can claim is limited by Section 23M of the Act, which is very, very limited. There's only a very limited amount of expenses an employee can actually claim against the remuneration or salary income that is received. So, yeah, so you have to be sure that where you spend your time, how you spend your time, basically, if you look at control and supervision, that's one of the most important questions. And then if you have full-time employees that work for you. The definition of connected person in terms of SARS is very broad, and we can spend a day on that alone. So the definition of connected, to put it in a very short term, is anyone that can be related to you. So even if it's your uncle's, aunt's, cousin's wife, it can be a connected person in terms of SARS still, because that's a very, very broad definition. So if you employ someone, they should not be related to you in any form or manner. I quickly looked at one of the questions here, and it asked if the premises of the client, online training or remote work. So to that's a little more difficult, because if I can do the work online from anywhere, then I'm not at your premises as such. But if you control how I do that work from wherever I do it, then the control and supervision one would then come in again. One of the other questions, where and how you spend your time, is linked to do you or don't you have employees? Okay, so okay, Lisa, I think to make it a little easier, you're first going to look at, where do I spend my time? Is more than 50% of my time at the premises of the client? And am I under their control and supervision? Because I can be at your premises, but not under your control and supervision. Then I won't necessarily be an employee. But if I'm under your control and supervision, and I spend most of my time at your premises, I am an employee. However, if I employ people that are not connected, 3 or more full-time, then it doesn't matter where I spend my time or if I'm under your control and supervision, because then I'm an independent contractor. Okay, so that's the statutory tests, and that's the most important one for tax purposes, because the common law test, which is the other test, this is an extremely difficult one, because there's no checklist approach. Basically, this handles, and it goes about the overall dominant impression. And this is a very, very broad, because my impression of something is not necessarily your impression of the same matter. So it's very difficult to determine an impression as such. And for common law tests, people mostly rely on case law to see what the courts have said about this. But for tax purposes, we look at the statutory test first. Once we see we can't use the statutory test, we go over to the common law test. So just in summary, where do I spend my time? Under whose control and supervision am I? And do I employ 3 or more full-time employees that's not connected to me? Why is it important for me to know if I'm an independent contractor or a personal or an employee? It's because if I'm an independent contractor, I am responsible for my own tax as I'm seen to be self-employed, whereas if I'm an employee, pay-as-you-earn gets deducted from the money that's paid to me. You can be seen as an independent contractor and request that pay-as-you-earn be deducted if that's for you an easier way of paying tax than professional taxes. But usually if you're deemed to be an independent contractor, no pay-as-you-earn is deducted and you do that on your own. So I'm going to move on to the next slide or the next topic, which is personal service providers. So a personal service provider is always a company, a close corporation, or a trust. It's not an individual. So any legal entity can be a personal service provider. This is also a very contentious subject, and it's one that most people that is personal service providers doesn't want to be determined as or be classified as, because there's certain restrictions put on you when you deem to be a personal service provider. But how do I determine if, okay, my slide here might not be correct because it says how to determine if a person is a personal service provider. It's actually how do I determine if my company or my trust is a personal service provider. So the test, there are 4 tests. This is very, very closely related to the tests that you do for independent contractors, as you guys will know. But let's quickly have a look at it. The 4 tests to determine if I'm a PSP or personal service provider is the first test is, do I receive a remuneration? Now, once again, this goes back to the definition of remuneration in the Act, which is very broad, but basically, can what I receive be seen as a salary? The second test is to determine whether the service is rendered personally by any person who is a connected person in relation to that company. Now, in terms of a company, me as a shareholder or me as a director would be a connected person. If I have a company and my son works for me in the company, he's also a connected person towards that company or trust because he's connected to me as the shareholder or director of the company. The next question is to determine whether the company employs 3 or more full-time employees engaged in the business of the service or of the service that's rendered by the company. So my cleaner, for example, will not be seen as an employee for this specific question because she's not rendering the services that the company renders. She's just like an auxiliary service for this specific company. And then the 4th question, and this is the most important one, is you're going to concentrate on whether one of the following was true. If any one of them is true, you're a personal service provider. If none of them is true, obviously you don't have worries. The first question would be, would the person who's personally rendering the services have been regarded as an employee of the client if the service was rendered directly and not through the company? The second question, must the person who's personally rendering the service perform the duties mainly at the premise of the client? And then the third question, does more than 80% of the income of the company come from one client? So if you have a company, you're the sole employee, shareholder, director of this company, and you render all your services to OMNI only, then you're definitely a personal service provider because more than 80% of your income's from that from OMNI or your client, one client. You don't have 3 or more other people working for you. And if it wasn't for this company, you would have been an employee of the business. So I think in short, you can sum it up by saying an independent contractor is an individual that renders a service. And if I'm deemed to be an independent contractor as an individual, then I would be an independent contractor or business through my company as well. Whereas if I render the service through my company, but I don't do anything else, this is the only thing my company does, and I'm under the control and supervision of the client, and that's my only client, then you're a personal service provider. Now, the big question is going to be, what does it matter if I'm a personal service provider or not? So just to sum it up, if you're a personal service provider, pay as you earn is deducted from the income that you receive. So whatever Omni pays you, they will have to deduct pay as you earn from, which sounds weird if you think we're talking about a trust or a company. But the fact is that at the end of the day, when you submit your return, you get that pay as you earn that was deducted as a deduction against the tax that's due by that company or trust. So you don't lose the money because pay as you earn's now been deducted. But, and this is where it gets tricky, a company or trust that's deemed to be a personal service provider, although they are still taxed at the same rates as a normal company or normal trust, they are prohibited from claiming certain expenses in terms of Section 23K. So the normal rule is any expense incurred in bringing forth an income can be claimed. So where a normal company would be able to claim any and all expenses as long as it was incurred to bring forth the income, a personal service provider does not have that same, I almost want to say, freedom in terms of the deductions that's claimable. You have to go and look at the prohibitions in terms of the law now, because you limited in terms of what you can claim because you're a personal service provider. That is basically the only reason why you don't want to be deemed to be a personal service provider. You want to be able to claim back whatever expense you incurred. I see there's a question here from Julian. Deduct pay as you earn from any salaries paid. So the pay as you earn, Julian, would be paid by the company that pays you. So if your company, ABC Limited, is rendering the services to Omni, and ABC Limited is now seen as a personal service provider, Omni will deduct the pay as you earn, pay it to SARS, and issue an RP5 certificate to your company, ABC Limited, and that RP5 you will then declare on your income tax return. So the company will be treated as a normal employee for pay-as-you-earn purposes by Omni. I hope that answers your question. Ian, I see you asked for individuals deducted. Okay, so for individuals, pay-as-you-earn is deducted on the tax tables for individuals. But for companies and trusts, you're going to overwrite your payroll system. So for a company, you're going to deduct 27% of tax at 27%. And for a company, you're going to deduct it at trust rather at 45%. So for a company or trust, it's not deducted at the normal individual tax rates. You can deduct it like that if you don't want to go through the process of overriding your payroll system. But yeah, you're supposed to deduct it at the correct rates, which is applicable to a company or a trust. Hope that answers that question for you. So we're going to move on to provisional tax versus pay as you earn. So provisional tax is a tax that is paid to SARS by self-employed people or individuals that does not earn a salary, as well as companies and trusts and closed corporations, and it's based on an estimation, whereas pay as you earn is deducted from your remuneration by your employer and paid to SARS on your behalf. So pay as you earn is the unfortunate tax we that work for a salary have to pay, which we have absolutely no control over. It gets deducted every month and paid to SARS whether we want to have it paid or not. Whereas pay provisional tax, I can bring my deductions into calculation and send an estimation to SARS when it should be paid. Sorry, just quickly a question here on the previous one from Ian, where you asked about the pay-as-you-earn tax or provisional tax payment. Does it count towards the settlement of your total annual tax liability? That's correct, it does. When I calculate my provisional tax, if I'm a personal service provider and the pay-as-you-earn has been deducted, I will deduct that pay-as-you-earn from my provisional tax liability and just pay the difference to SARS when it should be paid, because it's the same tax. So pay-as-you-earn provisional tax, it's all income tax. It's just getting paid in different manners to SARS. But the final tax that's levied on assessment, brings all of these taxes that's already been paid into calculation, and then basically you just pay the difference if there's any, or if there's not any difference due, then SARS will refund you. I don't know if you want to be in that position. We're experiencing a lot of problems with orders from SARS this year, but yeah, if you don't need to pay, I mean, we always feel happy about that. Okay, so who should pay provisional tax and when should it be paid? So provisional tax is paid usually twice a year, and it's paid by any company, close corporation, or trust, and any person who doesn't receive a salary. So if you don't receive a salary, if you receive income, any income other than a salary, you are a provisional taxpayer. However, if you receive a salary and you earn interest income of more than 23,800 Rand if you're under 65, or 34,500 Rand if you're over 65, you will be a provisional taxpayer. And SARS is ridiculous in this, that even if you earn 1 Rand more, they deem you to be a provisional taxpayer and then want you to submit provisional tax returns. These penalties and interest that comes into account with estimations and calculations, I won't be going into that tonight, but just for quick and interest sake, if you're a company, a closed corporation or trust, you're always a provisional taxpayer. And if you're a person earning a salary, you're not, except if you earn other income as well, be that rental income or investment income. Investment income, as we said, obviously that now gets capped at your exemption for interest. So if you go above that, you have to pay provisional tax. When should I pay provisional tax? So if you have a February year end, your first period is in August. That would be for the 6 months from March to August. So you're going to calculate your income for the first 6 months, which is kind of weird because in the 6th month you need to declare this. So you take your 5 months, you annualize it, and you get an estimate of what you think your income would have been. And then you pay half of your tax for the full year at the end of August. And then your second period is in February, where you look at your full financial year, or 11 months for that matter, annualize it and pay an estimated tax provisional on your full financial year. And then obviously you deduct whatever pay as you earn or provisional tax you've paid in the first period from this payment. Now, during September, which is 7 months in this case, so for February year end, SARS allows 7 months, but for all other year ends, so if you have a company with a June year end, for example, your first period will be in December, second period in June, but you will have a third period top up in June as well for the previous financial year. So, but February year ends, that top up is in September. And for all individuals, you automatically have a February year end. You don't have a choice. The top up payment, or this third voluntary provisional tax payment, is only made if you're in September and you realize that I haven't paid enough provisional tax with my first or second period. Then you pay in the difference. Now, the question would be, why the hell would I want to give SARS extra money if they don't need it immediately? The reason for that is interest. SARS levies interest on the underpayment of provisional tax from the 1st of October. Keeping in consideration that provisional taxpayers usually only have to submit their returns during January, you're going to pay interest from 1 October till end of January on underpayment of provisional tax. So making that third top-up payment to SARS, if you realize you haven't paid enough provisional tax, it's to save interest to SARS, because I don't think any one of us wants to give them more than what they need or what we have to pay to them. So the third payment, voluntary, and only if you haven't paid enough to basically save a bit on interest due to SARS. So in short, if you're an independent contractor, you have a company or trust, you're definitely a personal service provisional taxpayer. Sorry, you're definitely provisional taxpayer, and then you'll need to submit these tax returns or provisional tax returns to SARS. Once again, on assessment, when you submit your final income tax return, all the provisional taxes, pay as you earn, everything that's already been paid is brought into account and given as a credit against whatever is due at that point in time. Okay, I see there's no questions regarding this, so I'm hoping you guys all understand what I've been trying to tell you. I'm going to give over to Darren, that's going to talk you through home office expenses.
Thank you. Okay, good evening, everyone. I'll talk you through home office expenditure. During COVID, a lot more people have been have worked was sort of forced to work from home, and the question sort of asks what home expenses can I claim? Um, we can look at what does the law say about office expenses. It says, sure, come deduct expenses you incur at home as a result of having a job, but only if it is specifically and exclusively used for trade purposes, and it can't be for employment income unless 50% or more of your total remuneration is commission, service, or output based. This would be sort of fall in line with what contractors receive as remuneration. And most of your work done is outside of an employer provided office. Or in the case where 50% or less of the total remuneration is a result of commission, most of your work is done at your home office. Now, with this whole this COVID thing, so I sort of saw a lot more people claim home office expenditure, and as such, being SARS, they increase the restrictions basically on this. So there's a lot more. The requirement has remained the same, but the implementation of the rules has become more stringent. So we have to look at what are the requirements for home office expenses. Yeah, so it says, did you receive remunerations for duties performed mainly in part of your private premises occupied for purposes of that remuneration? Do you have a dedicated room in your premises? Is this room specifically equipped for the purpose of that remuneration? And is this room regularly used for purpose of performing that duties in relation to that remuneration? Also, is that room exclusively used for the purposes of performing the duties in relation to that remuneration? As you can see, there's a lot more stringent requirements, but I would say a very important one is, do you have a dedicated room in your premises for this, where you would claim the home office expenses? Uh, it's sort of, how can I say it? No, sorry. Um, the reason for this is because the home office will form part of a small percentage of your total property, in which the expenses that you would claim, that you're allowed to claim in terms of your income, will be a portion per that specific room in your premise. Um, the expenses that you might claim may be rates and taxes, electricity, insurance, but for the premises only, security, repairs and maintenance, and such. But as I've mentioned, because of the increase in the, how can I say, clamp down from SARS, an expenditure that was previously allowable to be claimed was interest on your home mortgage, which you could have claimed as a part of expenditure. They sort of issued a latest interpretation note 28, in which they say that because Section 23B and Section 24J clash, you cannot claim this interest on your home mortgage, because they see it as a capital. The loan is capital, and as such, the interest on that loan is capital as well. So you, from 1 March 2022, which will be your 2023 tax year, you are no longer allowed to claim that expenditure. There's so we in in tax department, we sort of deal with the question, is it sort of what's the downsides to claiming home office expenditure? And I would say the biggest one is uh, you as your home, you receive a 2 million rand annual exclusion on the when you dispose of your home, your primary residence. Now, a portion of that where you claimed your home office, that square meterage, your dedicated room that you have now for your um, work that you do, your trade, that won't be covered by this annual exclusion. Therefore, that portion will be subject to full capital tax, essentially, and that sort of would increase your tax liability. That's why in the long run, it might not be as beneficial as what you would think. If you might consider selling a home in the future, it is not, I would say, not the greatest idea of to claim home office expenditure. And then another thing that we in the tax experience is like 99% of income tax returns which we submit, in which the taxpayer claims home office expenditure, is selected for verification. And like I've mentioned, the SARS have sort of increased the rules on it, and the stuff that they've requested has increased significantly. But the important ones that they usually ask for is a letter from your employer confirming that you may use your home as home office, the schedule of the expenses which you've incurred, but ensure that you have all the supporting docs and invoices for these expenses that you claim, as well as the square meters of the home office area, as well as the total home area square meters, because your expenses that you claim will be apportioned to the home office, your study room, essentially, over your total uh, homes square meters. They will also ask you for a 360-degree photos of that home office. So they sort of they're gunning for people that claim home offices. Okay. So, okay. I see that you've answered some of the answers. Okay. Um, okay.
Sorry if I can quickly interrupt you.
No.
Darren, that said now about the 360-degree photos. We even had SARS at one point refuse to allow home office expenses for a client because the office didn't have a door. So we have argued with them about this, saying that just because I've removed the door doesn't mean the space isn't specifically equipped. So just make sure that if you ever have to take pictures of the room, that you would be able to prove to SARS that you can do absolutely nothing other than work in that specific space if you want to claim that for home office expenses. Sorry, back to you, Darren.
Thank you very much, Marita. Yeah, I think is there any questions? I think that sort of covers home office expenses. Can I claim home fiber and or data even if you use it for business and personal use? The thing is for home fiber and telephone, that is, you can claim it, but it's not apportioned to the square meters. It is a sort of a portion between your personal and business use.
Yeah, they just answered that.
Okay. Oh, sorry.
No.
Okay. Okay, is that
part of the room that is partitioned off be explicit and exclusive use?
what?
That's one that
Okay.
Julian, you can
Okay.
address that one.
Okay. Yes, it will be allowed because it is used exclusively for your trade. So say for instance, you had a extra bedroom, but you've converted it now into a study room. That as long as it's exclusively used for your trade, you are allowed to claim those home office expenditure. Where it becomes not tricky, but where SARS won't allow it is where, for instance, you have this open area, your kitchen and slash your work area in which you operate. They will see that as um, as being only a kitchen and not an exclusive room for your trade. So you can't exactly work there and then sort of eat and then they claim it as a home office home office expenses. That helps.
Yeah, I think that's
Okay.
it.
Okay, and on to the next topic. Okay, tax compliance statuses. Okay, what is a tax compliance status and why do I need it? With regard to, I know that at OMNI they require for all the contractors to have to be tax compliant and send them a tax compliance status PIN. What exactly is a tax compliance status? It basically says your taxes. It indicates if your taxes are paid and up to date. Uh, it's because in the past it was only required by government, but this has now become a general practice in private use. Basically, it's sort of, how can I say, it is almost as used by businesses as a credit check, essentially, to see that you will pay sort of, how can I say, the biggest credit in your life that will follow you to death. If you will pay, if that's sorted, then you are compliant. How to say, if SARS, if you owe SARS money or if there are returns outstanding, your status will reflect as non-compliant. The details for how much you owe to SARS or what is exactly outstanding will not be displayed on that TCS PIN that is sent by someone that requested from you. If you owe SARS money and have deferred payment arrangements, your status will reflect as compliant, but you have to have your taxes has to be up to date for you to apply for that payment deferment, as well as applying for the payment deferment for your status to reflect as a good standing. TCS PIN letter is issued by SARS that you can supply to any person, company required a good standing tax clearance and can be obtained via e-filing.
The one we.
Oh yeah. Oh yes. Oh yes. If, for instance, you are satisfied that your taxes are up to date and you are certain that everything is correct, but there's an issue with SARS, then you can challenge the tax status and say, for instance, you individual or company, your tax return that you've submitted is that SARS has incorrectly calculated is under appeal. That will be, if you appeal that, it will show as good standing. So that won't be an issue as well. So yeah.
Any questions? No. Nothing.
Okay.
Okay.
Oh, sorry.
Go say.
Marietta, Darren, thank you so much. I do want to just encourage everybody to please ask questions. We have a unique opportunity with two experts. So if you've got any questions, I know there has been some in the chat, but I'm sure there might be more questions. So please make use of the opportunity. We still have a few minutes.
Yes. Just quickly, Ian, you asked about our pricing plans and special rates. We really, really try hard to assist anyone and everyone and try to be in a place where we can assist you within your time bracket or your price or what you can afford. Most of our fees are time-based. So if you do a lot of the work yourself, obviously our fees will be much lower. But I think people are more than welcome to contact us. We'll be sharing, there you go, there's our contact detail. People are more than welcome to contact us and we will gladly assist. If anyone has any queries, we usually have a policy where we say our first consultation is on us. We won't charge you for that. If you become a client, obviously after that, we're always available for consultations at any point in time. If you don't become a client, then unfortunately, I'm going to have to charge you a small consultation fee from the second consultation, but you're more than welcome to contact us with any queries at any point in time. We will really gladly assist. I always say the Bible says, sorry, I'm Afrikaans, so I'm going to do this in Afrikaans. It says, gee die keizer wat hom toekom, but it doesn't say give him more than that. And if I can assist anyone to just do, to be at the point where you give him what he deserves, then we would gladly assist with that. Okay. No other questions.
That's really, That's really generous and great because it does help people, because SaaS is it's not necessarily everybody's skill.
No.
And when you run as a independent contractor, or you run as a personal service provider, or even a business, you know, our focus is always in managing our output and not necessarily managing all the compliance requirements centered around that. So I think that's really important to understand and to know. So thank you
No.
for that.
No, it's only a pleasure. Thank you guys for the opportunity. I love sharing knowledge. I'm passionate about sharing knowledge. So it's a wonderful opportunity to share knowledge with people that we can help with what we know. So thank you for that.